Okay. Hello, everyone. It seems like today we finally managed to get it to stream in landscape mode. So, like we said previously, we will try to have these live YouTube sessions every Sunday at 2 p.m. So, whenever we have some time, then we'll be able to stream this. So, depending on the number of people that pitch up, the goal is to always try and answer as many people's questions as possible. So, yeah, the length of the session really depends on the number of people that pitch up for the session. But as always, we're going to start by covering a few topics so that we make sure that we can cover a bit of things before we allow people to ask their questions. So for the first 30 minutes, I'll be talking about some things that I would like to discuss with you. Then on that, after 30 minutes, I'll give you an opportunity to ask your questions. Then I will go through your questions. Like I said previously, at this moment, we are limited by the hardware that we use. So we can't stream and also show you our screen. But if you have a chatting platform in front of you like TradingView or investing.com, then maybe you can just go through and look at the chat as we discuss some things with you, right? So I just want to check on a few things. All right. So today, I just want to remind you that we had a video sometime this week. In this video, we're talking about how investors make money in the stock market. So we just sort of gave a brief overview of how investors can make money in the stock market. We spoke about capital gains or capital appreciation. Then we spoke about dividends or distributions that you can collect as an investor. So when we speak about capital gains, we said that if you buy something and the value of that investment increases, that is how you get a capital gain. We mentioned that if you do that, just keep in mind that you will be liable for paying tax whenever you dispose that asset. Depending on the period that you are holding that particular asset, by asset I mean shares or ETFs that you'll be holding outside the tax-free savings account. So once you sell them, then you trigger a capital gain tax because that transaction mean that you have disposed an asset. So the way that SARS classify something, the difference between investing and trading, if you hold an asset for more than 3 years or at least 3 years, then SARS consider that to be an investment, not a trade. But if you hold an asset for less than 3 years, then SARS consider that to be a trade, and then they charge you a different tax rate. If I recall well, the capital gain tax is 20% or 18%. Just make sure that you check on the SARS website what is the current capital gain tax when you dispose an asset after 3 years. Then the word on the street is that if you dispose an asset within 3 years, then you will be taxed according to your current tax rate. But also remember that there's that 40,000 that you can subtract. But I'm not a tax practitioner. Always make sure that you get advice from a qualified professional, the people that understand tax very well, right? So now that we covered that capital gain, we said that the other way that you can make money in the stock market is by receiving a dividend or distributions into the investment that you hold. We spoke that if you buy companies and those companies are profitable, then you can actually be paid a dividend or a distributions if the board declare a dividend, right? You said that you get dividends from the shares that you own, and you get distributions either from real estate investment trust, or you can get distributions from ETFs. And then we mentioned that it's much better to invest in ETFs. It's better to invest in the tax-free savings account because then you would be reducing your tax liability. Remember, if you invest that maximum 36,000 in a tax year, in that tax-free savings account, you can dispose those assets without triggering the capital gain tax. Even the dividends or distributions that you'll be receiving, you won't be paying that 20% tax withholding or dividend withholding tax. So consider using a tax-free savings account before you use other accounts where you'll be paying tax. But then again, this is not a financial advice. I'm just sharing ways that I use to reduce my tax liability, right? The 3 years of SARS is a bit tricky because I don't know a lot of people that just sit tight with, with their shares for 3 years. But for those that can do it, great. I mean, if they can do it, let them do it. But most of us at some point, it's either the share price is falling and we find ourselves selling the shares that you own because we're trying to reduce our loss. Remember, investing is risky. We cannot run away from that risk. The only thing that we can do is to minimize our risk by using risk management tools, depending on whichever tool that you want to use. I use a stop loss. So if the share price move against me and then it triggers my stop loss, I always take that stop loss, right? Other people, they try to buy undervalued companies, but that just it boils down to your approach in the market. We all use different approaches. My approach is that if the share price move against me, then I will just cut my loss. Then by doing that, I would have triggered capital gain tax, except that it's a loss, so I didn't gain anything. But if you close a position for a profit, that's when you really need to be mindful. So I'm not sure how they calculate it. I don't want to say that some of your losses will offset your gains. No, I don't know. That's where you need to consult a tax practitioner, somebody who's going to give you a sound advice based on fact, not based on what we are thinking. There are a lot of people in the financial literacy or FinTwit, whichever you find yourself in. There are people who are really experienced in these topics. Then they can give you a professional advice. Probably it's coming at a fee, but you are better off paying that someone than owing SARS, right? So make sure that you watch that video. It's one of our recent video where we're talking about how investors make money in the stock market, right? Then the other thing that I want to talk about is the different sectors. We saw that in the past few weeks, depending which market you trade. I trade the JSE, but I also trade the US markets as well. Well, in the US market, it doesn't matter which exchange. There's New York Security Exchange, there's NASDAQ, there are other exchanges there because you know America is a free country. Capitalism is busy there. There are different exchanges. So if I'm just buying a stock, I don't. To me, it doesn't really matter whether it's listed in the New York Security Exchange or it's listed in Nasdaq. That is why I say I trade the US markets. So depending on where you trade, and also the nice thing about this is that the risk wasn't the same. I mean, I've been on the JSE ever since I started investing. It's only recently that I started investing in the US. So if I look at the performance of the JSE in 2021, the whole of 2021 was good. We were able to make some money, but also in the US, we were also able to make some money in the companies that we invest in there. But around October going to November, the US market it started to be weak. Well, we didn't need to see the S&P or Nasdaq crashing because from what we saw is that the positions that we were buying, either the breakouts were failing or some support levels were failing. Our stop loss was getting triggered more than usual. But in the JSE, the market was just continuing to trade higher. We had a lot of tweets. We made a few videos talking about the JSE top 40 reaching all-time high. So locally, the market was doing well. Same going to December. December was a bit quiet month. I mean, people are on holidays, so there isn't much action there. But since the beginning of 2022, we saw that the US market was hot. A lot of stocks were triggering stop losses. So there were a lot of reversals in there. So fortunately, we have a large exposure in the JSE, so we're able to ride that wave there. But what we noted is that, remember, we always say that the stock market is not just a stock market, it's actually a market of stocks. So even during a market crash or a market correction, you can always find buying opportunities. Remember, we use these equities, even though on the eToro account we can short some stocks, but we do not trade contract for differences, aka CFDs. We don't do leverage trading. So we just on the long only side, but that is because it's the kind of information that we want to share with people. We don't want to advise people. No, we're not saying people shouldn't trade CFDs. Those not experienced, they can continue to do what they want because they can deal with the risk that comes with it. But if you are a beginner investor, you are better off buying shares, not on margin, just pay the full price of the shares and try not to trade sophisticated product like leveraged equity CFDs. So that means that we cannot go short on some stocks. It's either we are selling the positions that we have or we are just buying more stocks. So on the long side, we saw that even though the US market was under pressure, there were some companies that were still giving us some nice buy signals. And that sector, that's where we're getting most of the buy signals, was in the energy sector, right? So now when you scan the market looking for trading opportunities or investing opportunities, once you have a defined set of rules, you don't just log into the stockbroker and start browsing all the 300 plus GSE companies. No, you can actually use a scanner to look for companies that meet your rules or your criteria. Then you focus on those companies rather than tracking everything in there. So we noticed that whenever we run a scanner, we get a lot more of the stocks in the energy sector. Then you look at the price of Brent crude. I also trade Brent crude, but that is CFDs. Remember, I said I do not encourage you to trade CFDs, but I do trade CFDs. So we saw that some companies were coming from the oil and gas sector or the energy sector. Even locally, Sasol was doing well. Then we looked at the ETFs that tracks that sector. We saw that okay, those sector were on an uptrend. So the sectors that we looked at was the energy sector, and we also look at the oil and gas sector. So in America, there is a company that offer ETFs within that sector. It's SPDR. We have a video on YouTube saying why we're expecting Sasol to continue to move beyond 350 rand per share. We made a video last week. Sasol on this Friday, Sasol closed around 340 rand per share. No, we didn't predict that the market is going to go up. We do not predict, we react. So the reason why we're saying that Sasol can go up to 350 rand per share is because it was trading near a resistance level. So we noted the price of Brent crude that it was crossing resistance level. So if at the time Brent crude was trading below $86 per barrel, and then we noted that once it starts to trade above $87 per barrel, that means that it has broken above the resistance level. So between 87 and 100 US dollars per barrel, there is no resistance level. So we anticipated that if the share price or the price of oil move from 87 to 100, Sasol can also benefit from that move from that high oil price. So that was the rationale to say that the price of Sasol can go up. We were not just predicting that Sasol was going to go up. We don't even know. I mean, we have an idea of what Sasol does, but if you were to ask us about Lake Charles or Sasol debt, we have no clue what is happening there, right? And that's the beauty of technical analysis, because we can find opportunities without knowing a lot more about companies, right? So when we looked at the energy, the oil and gas sector, we had companies that were giving us nice buy signals, especially in the US. A lot of tech companies were struggling, they were breaking low. We saw Netflix, it just broke below support. Amazon as well, it was also losing support levels. But within the tech space, two companies caught our attention, and that is Apple and Microsoft. Both of them, I think Apple released the result either Tuesday or Wednesday last week. Not sure when Microsoft released the result or they are going to release result, but those stocks, they continued to stay strong despite the fact that some companies within the tech space were getting hammered, right? So the point that we're trying to drive home with this is that even during a market correction, let's not call it a market crash, let's just say it's a market correction. even during a market correction, there are some sectors that are still doing well. They are not necessarily benefiting from the stock market correction itself. Companies are not created equals. Different products are in demand at different times. So it's the same thing. If you have the skill to look at the chart, meaning if you can do technical analysis, you can actually find buying opportunities, whether it's in the bull market or it's in the bear market. Now, the thing about the bull market is that most of the things are going up. That is why people maybe they start to think that the stock market always go up. But if you can make money buying stocks in a bear market, then maybe you have a bit of a skill. You can make money in a bear market by shorting the stocks and indices and everything that is falling. I mean, you will be on the right side of the market. By right side, I mean the direction of where the market is going. But if you are trading against the trend, I'm not talking about going long on the S&P 500 while the S&P 500 is falling. I'm saying within those 500 companies that are in the S&P 500, majority of them are falling, but that few that are going up, if you can spot those, then you'll be able to make money, not necessarily sitting in cash, because the other option that you have, if the stock market is falling and there is nothing to buy, you don't need to sit in the market and sit on that drawdown as the market falls. You can actually cover your positions and sit on cash, because if you're sitting on cash, you are sitting 100% on cash. Even if the market correct by minus 30%, when you are still sitting there at your full cash position. Once the market bottoms start to give you buy signals, then you start spreading that cash, buying other companies that are on an uptrend. You see, but if you really want to buy stuff, you can find stuff to buy just by looking at the different sectors, finding sector that is on an uptrend, and then diving deeper into that particular sector, looking for companies in that sector that are on an uptrend. Remember, a sector consists of many companies. You don't want to buy all the companies in the energy sector. You probably want to buy the top two. By top two, I mean the two strongest companies that are showing price action that is moving up. I'm not talking about looking at that sector, then finding a company that has a large market capitalization, meaning that you are just buying the big company. Big company is not necessarily the most profitable company, where now your job as a trader is to make as much money as you can in a market movement. Unless you consider yourself an investor, maybe you always wanted to buy that big company, but you couldn't afford it because the share price was expensive and now it's falling. Then you think that you're going to get a better opportunity. But from a trader's perspective, a strong company is that company that is showing a price action in an uptrend. That's it. That is how we define it. And that's the reason why we found ourselves buying more of a Occidental Petroleum Fund, because that's where the market was strong, but also Chevron was strong. It's just that Chevron was far from an arrow veil, so we couldn't get a position there. And also ExxonMobil was doing well. We couldn't get a position there. But some of the companies are not necessarily doing oil exploration. Some of them are oil processing, or they are selling tools that are used within the energy sector. So that is why we're able to get a position in SLB. So a friend made a comment in one of our videos to say that we spoke a lot about US companies. The goal for this year is to trade more of the US stocks. We still have a large capital in the JSE, but we want to find opportunities in the US sector. The rand is not always stable. Whenever the rand gets devalued or it's weaker than the US dollar, so we want to benefit from that rand weakness. I mean, if you are holding shares in the US market, even if the share price is fixed, let's say the share price stays at $100 per share, but the rand dollar exchange, it moves from 16 rand to the dollar to 17 rand to the dollar, then we have made a profit of 1 rand to the dollar, you see. So that is why we try now to focus in the US. I'm currently not, for those that are using these equities and they have the Australian dollar or the Australian portfolio they've activated, I haven't activated mine. I don't want to spread myself through all these exchanges, especially if I don't have enough capital to invest in all these markets. One thing that I've learned in the past is that there's no need for you to be invested everywhere, especially let's just say you have 1,000 rand for an example. You rather take that 1,000 rand, trade one market, whether you're trading JSE, Australian market, or the US market, rather than splitting that capital and putting 330 rand into each sector. They are not performing the same. Sometimes the JSE is doing well than the Australian market, or maybe the US is doing well than the JSE. So you have to make sure that you put your limited capital into the market that is strong, because at the end of the day, it's not about where you are, it's about making money, and always look for a place where you can make as much money as you can, maybe with not so much energy to put in there, right? So let's see. Okay, for those people that are wondering how I was able to find this energy sector, there we have an ebook. We've always spoke about this ebook. If you go to the description of this video, you will see there we speak about ebooks that you can buy on Gumroad. There are two ebooks. Each ebook cost 25 US dollars. There you get access. It's the ebook is available in two different formats: EPUB and PDF, depending on whichever format you want. You can download it. Those ebooks, they come with videos. You can see how we set up the chart, how we run the scanner on TradingView. So it's a complete set. Plus also you get a lifetime email support. For as long as I'm alive, you will get that email support. Well, yeah, that's it. Nobody else can give you that email support regarding that book, right? So if you have $25 to spare, you can grab yourself a copy of that ebook. You can buy one or two. Fine, I'll be happy if you buy both of them, but it doesn't matter which one you buy, depending on what you need. One speaks about the strategy that we use to find companies. One speaks about how we use that strategy to find dividend paying companies. Remember, we also have a dividend portfolio where we always give you an update. So some of the rules that we use to find those companies that pay us dividend, it comes from the ebook that is called the Dividend Manifesto, right? I've already covered Apple and Microsoft. That is something else that I wanted to talk about. I said that Apple and Microsoft, even though the tech sector was showing signs of weakness, but those two companies, they managed to stay strong. So in a market correction, if you focus on the companies that managed to stay above, to survive that market correction, if the market recovers, those are the companies that have the potential to continue to grow further. We're not saying that once the US market is done correcting, Apple and Microsoft are going to do well. We are just saying that they have a chance to do well compared to the companies that fail, right? And then, okay, just give me a sec. I need to make sure that there's no noise. Right. Okay. So the last bit and pieces that I want to talk about is the two ETFs. Remember, we spoke about. Okay, we said that the JSE Top 40 is on an uptrend. Then now, how can you take advantage of that? You can buy a top 40 tracking ETF. There are different ETFs that you can buy in different accounts. The one that is cheaper in terms of total expense ratio is the Satrix Top 40. But now Satrix has introduced the Satrix All Share or Satrix Capped All Share Index ETF. The difference between the two is that the top 40 ETF, it only tracks the top 40 largest shares by market capitalization in the GSE. But the capped all share index, that one tracks all the companies in the JSE, but it limits no company is going to have more than 10% in that ETF. For example, in the Satrix Top 40, before Naspers broke into two companies, Naspers and Process. Naspers used to be around 23%. So now in the top 40, let's assume that Process does not exist. You still have Naspers. That will mean that Naspers will have 23% in the top 40 ETF, right? But now I'm sure that Naspers is still more than 10%. Also, BHP, Billiton, I think also Standard Bank is big, and Growth Point are big. They are more than 10% in the JSE Top 40. So now in the capped all share index ETF, No company, it doesn't matter how big it is, no company is going to be greater than 10%. So that's the main difference, right? The other difference is that the Satrix top 40, it pays quarterly distributions, meaning that every 3 months you are going to get distributions. So the distributions are declared in March, June, September, and December. So the payment reach your account, the Easy Equities account or your stock brokerage account, not your bank account. So the distributions payment reaches your account in January, April, July, what else? October. Yes, yeah. So you get paid 4 times for holding the Satrix Top 40 ETF. But the capped all share index, that one, it does bi-monthly, meaning that every 2 months they are going to declare that distribution. So in my view, or for me, I'm more interested in the capped all share index, because it means that I'll be receiving distributions every 2 months. But remember, here we're not comparing apples and apples. If we're comparing apples and apples, for example, we'll be looking at a Satrix top 40 ETF versus maybe, let's say, one vest a top 40 ETF if they have it. I know Kosher has top 50, not top 40. New funds, not sure if new funds have a top 40 ETF, or even Signia. I don't think Signia has a top 40 tracking ETF. So the Satrix capped all share index is no, we are not comparing apples and apples if we compare it with a Satrix top 40. As much as the top 40 companies are still dominating there in the capped all share index, but if you there are some small cap companies, I prefer to use the term small cap rather than penny stocks, because a small cap company is just a company that has a small market capitalization. Yes, the way that they calculate a market cap, they use the share price multiplied by the number of outstanding shares. But you do find, all right, Oscar Ntuli, we will meet. I'm based in Pretoria. I'm just about to finish, then I will start answering your questions, right? So now, what I was saying, okay, I was saying that a small cap company like a PPC is not a penny stock, but it's a small cap. So if you buy the top food, you miss a PPC. We saw that ArcelorMittal, it also did well. Purple Group did well, but all those companies, okay, I'm not so sure about Steinhoff. The share price is low, but Steinhoff, I think it's a big company, so I'm not sure whether it's outside the JSE top 40, because the last company in the JSE top 40, it's between Impala Platinum or Sibanye Platinum. I mean, Sibanye is still what, right? And also, if you look at the market capitalization, I think the last company in the top 40 has a market capitalization of about 50 billion rands. So any company that has a market cap that is below 45,000, I mean 45 billion rands, it's outside the JSE top 40, you see. But there are plenty of companies outside that are doing well. Curo is also doing well now. Advtech is doing well. Alviva is doing well. So if you buy the top 40, you put yourself in a position where you are going to miss some of the good performance. That is why I'm biased towards the capped all share index, but also I'm biased because of that bi-monthly distributions. Hayi bafowethu, mina ngiyayithanda imali, so I want that paycheck to keep on coming. Remember, we have a video where we're showing people how, and there are stocks that you can buy to actually receive a monthly dividends. Three of those companies that we spoke about are actually companies that can pay you money. One does some voodoo magic, they call it some call the short stuff. The way that they generate that income, it's a bit tricky. If the market work otherwise, they might not be in a position to generate that, right? So do check that video, we'll link it once we've done uploading this video and we've edited it. We'll link that, I will put the link to those videos. But if you browse through on our channel, you will see that I think the title of this video is 4 companies that can pay you monthly dividends. So do go watch those videos, they will help you. We've got plenty of other videos where we're talking about why people should invest, they should invest, or how we would invest if we were beginners. Because from time to time when we engage people, we do answer, sometimes it's the same questions that you keep on getting. How can I start investing as a beginner? And we have a video. In that video, we said that if you're a beginner or you have limited capital, it's much better to invest in an ETF, an index tracking ETF that is low cost, like the Satrix Top 40, where the total expense ratio is 0.1%. You'll be getting quarterly distribution. The ETF is already diversified, so you don't have to worry about diversification, right? So we do have those videos. Do spend some time just browsing through on our YouTube channel to see what else can you find. Don't just focus on the recent stuff that we have covered, right? So we did a poll. If you go to our YouTube channel, you will see that there's a community tab. If you click on that community tab, you can see sometimes we post some trades, but the recent post we were talking about a Zoom webinar that we are planning to hold. It's going to be a free Zoom webinar. So at this moment, I think about 10 or 11 people, they have voted that they would like us to have that Zoom webinar. Right. The reason why we are using Zoom is because, well, now I'm recording with the phone. My laptop, it's a bit slow. I can't stream and share the screen with you. So if we have the Zoom webinar, we can share. I can share my screen. People can ask questions. I can show things on my screen, whether there's some questions that they have on easy equities or questions that they have in terms of how I'm using the chatting platform, right? So we'll do that on Zoom. Then later on, we can upload the video. It's just a pity that we can't do the Zoom session and stream it at the same time so that we can answer other people's questions. But the people that will attend that Zoom session, they will be able to ask as many questions as they can, and I will try to answer them all the questions that I can answer. If I can't answer a question, then there's nothing that you can do. I don't want to lie to you. I don't want to give you a misleading information. So at this moment, today it's the 30th of January 2022. The plan is that we're going to have this Zoom session next week. Instead of this live webinar on YouTube, we are going to have the Zoom session. So I will set up the Zoom details, leave them there in the community tab. You can go to the community tab once we've done it. I haven't done it now. Once I've done it, then you will see the Zoom details. Probably it's the Zoom ID and the Zoom, what's this thing? I will answer your question, Baba. Then it's the Zoom ID and the Zoom password. So next week, Tuesday, instead of having this live YouTube live YouTube session, we'll have the Zoom meeting. We'll try to keep it under 2 hours. Plus, I'm using Zoom for free, so I'm already limited. Once we have over 3 people in that Zoom, I think I'm either limited to 60 minutes or 2 hours. So once that time passes, then we end the session there. So as I'm making videos during the week, I will say, but now I will just schedule it. You will go to our YouTube channel, then go to the community tab there, and then you'll be able to see those Zoom details. So that's all that I wanted to share with you today from my side. Now, if you have questions, you can start asking questions. Then I will be able to answer all your questions as they come. Right? All right, Babutuli. Yeah, no, we will meet depending where you are. I'm based in Pretoria, so if you are in Pretoria and you can make a plan, yeah, sure, why not? We can meet. Babu Mosut, right? I don't, okay, for CFDs, I'm trading oil S&P 500. I'm using hot forex. I don't trade equity CFDs. So yeah, if you're looking for equity CFDs, there is none that I can recommend at the moment because they all differ. It's either you're finding a CFD broker that is not giving you the live prices. If you find a CFD broker that will give you direct market access and live prices, they have high commission. The commission sometimes it's 50 Rand. So of the two that can give you direct market access and have a high commission that I know of, it's Herenia Capital Advisors and IG South Africa, right? If you use GT247, it's been a while since I used a GT247, so things could have changed. But at that time when I was using them, they were not giving me direct market access. They were giving you what is called a market maker. So you get whatever price that they want to give you. You can try to inquire about the price, but they will just tell you we're selling at this price and there was a buyer at that price. So I wasn't impressed with that. The prices, I can't say they were not live, but in terms of commission, the commission is insignificant because the commission is already layered into that spread, which probably explains why they had a bigger spread, right? Okay, I see that he says he's based in Albertine. All right, Albertine is not that far, but it's you who's going to come to Pretoria, right? So anyone that is here, if you haven't subscribed, please consider subscribing to the YouTube channel. If you have enjoyed what we have discussed so far, please give this video a thumbs up. I will really appreciate that. And if you have any questions, just keep your questions coming. Even if you want to ask chat, even though I won't be able to share the chat with you, I'm sitting in front of the PC. I can just easily look at the chat and give you an opinion based on the chat, right? At this moment, I don't know where Sasol is going to go, but I'm happy that Sasol is now trading closer to that target of 350 Rand per share. It's not there yet. It's somewhere around, let me see, it closed on 342 Rand 89 cents. So that's more like 342 Rand. So tomorrow we just need to go up by 7 rands, but that will also depend on the price of Brent crude, right? And then there are also other companies there, right? The bear market of crypto has killed you. What's my take? All right, I was bearish on crypto for a while. Remember, I use technical analysis, so I'm talking from the view of using the chart. We are not talking whether crypto on its own is it a good or bad investment. I'm not critiquing or criticizing crypto based on the chart. We had a video where at the time Bitcoin was trading, it just gave a fake out. So basically, a fake out is when the market acts as if it's breaking above a certain level and then it comes back below that level. So we're looking at Bitcoin. We wanted it to trade above, I think it was 67,000 or even 70,000 US dollars per coin. Then it just went up a bit. Let me see what was the highest that it traded. So it traded at about 68,900. Then it started to pull back the following week. It closed around 58,000. So you see, just 1 week, it chopped off 10,000 US dollars per coin. So that was a sign that we're now looking at a fake out. But when we made that video to say that Bitcoin can go up to 90,000 US dollars per coin, we mentioned that our stop loss was somewhere around 63,000. So I use a VALR to buy cryptocurrencies. When the price of Bitcoin reached that level, I closed my position. And then, yeah, from 63,000, I haven't been holding Bitcoin. I have ADA and Matic. I'm still, well, it's not about when I'm bullish or bearish. I still have a position on Matic. It's also not doing that well, but I do have that coin. So far, Matic is showing a bit of strength compared to the other coins. Remember, I said that you can look for those companies or even crypto that are stronger than the other. If there is a market correction, those ones they still hold, they don't crash as fast as compared to the others, right? So now I don't know whether Bitcoin is going to, at this moment Bitcoin is trading at 38,100 US dollars. It seems like it didn't reach 30,000, but we will see how the next candle is going to work. I'm looking at a weekly chart, not a daily chart. So at this moment, the last week candle is still green, depending on where it closes. If it's close above the 38,000, the candle could be green. Maybe then we can see a pullback going all the way to 45,000 US dollars. But that is just a speculation. It's based on the chart. Yeah. So the most of the crypto, Bitcoin, Ethereum, Litecoin, Algo are still bearish. The one that is a bit bullish is Polygon or Matic. We made a video where we're talking about Polygon, right? Yes, ADA, ADA is still. ADA fell because that one they really disappointed me because I bought it at about $1.50. I was supposed to exit at about $1.30, but it's now trading at $1.06. So yeah, that one created a bit of I'm sitting red there, but I'm not worried. The reason I'm not worried is not because I have. I mean, obviously, it's a bad thing to allow a small loss to turn into a big loss. The reason why I'm holding is because the value of the investment that I put in there is insignificant. It's an amount that I can easily write off. But if you have a large amount of money, always make sure that you exit your positions. You don't want a position that goes beyond minus 10% because it's not going to be easy to come back and break even, right? All right, where do I buy USA ETFs? The USA ETFs, I think you can only, if you're using these equities, you'll only be able to buy them in the USD account. But I also use eToro. So in eToro, I can buy anything, stocks and ETFs. Yeah, right. I hope that you are not asking in terms of tax-free savings account because they are not in the tax-free savings account. Remember, government want us to save. That's why they gave us the tax-free savings account option, but they don't want us to save all the money. So I don't think that they will allow us to invest in foreign companies and not pay tax. For example, if you buy an ETF that tracks resources like ETF rhodium or ETF gold, those okay, ETF rhodium is not in the tax free. Not sure about ETF that tracks gold, but I know for a fact that the rhodium ETF you won't find it in the tax-free savings account. So you can buy the USA ETFs on the USD account. In fact, I bought a Vanguard Energy ETF. The share code is VDE. I bought it in the USD account there, right? But if you're holding long term, there's no issue. Yeah, my sister, the problem is that on paper, long term, if you ask anyone to define long term, yeah, how long is long term? You see, people will tell you it's maybe 3 years, 5 years, 10 years. Now my question is simple. Let's use Sasol as an example. You buy Sasol today, you say that you're going to hold it for long term, 5, 10 years. Then next 18 months, you bought Sasol at 340 per share. Then next 18 months, Sasol is trading at 150. Are you still going to hold? Right? You can convince yourself that you're going to hold, but how does it feel in your heart? Are you still happy with that position? You see, so that is how personally to me, I'm only holding a position as long as that position hasn't hit the stop loss. Once it hits the stop loss, I exit. It's not a question of long term or short term. I have positions that I've been holding for years. The reason I've been holding them is because they haven't triggered the stop loss. It's not about the company or about the long term thing and whatnot. No, it's just because they haven't touched my stop loss. And then another thing, companies, we know not all companies survive the stock market. If you look at PSG, we can say PSG started trading at about 3 rand or 350 per share. Now they are trading at 80 rand, but that was they have fallen for a while and then they're starting to recover. Or we speak of Capitec. Capitec it traded below 5 rand per share. It's now trading around 2000 rand per share. Yes, good story. Survivorship bias. We are nitpicking the winners. If you ask people about Enron, depending how old are you, some people don't even know that there's a company called Enron that once existed. Here in South Africa, we had a company called Toro Industries. The business still exists, but the company is no longer listed in the JSE. The company was founded in 2012. We are now in 2022. The company no longer exists in the JSE. So when we speak of long term, it's really tough to say how long. If you speak about the JSE top 40, that one is you can hold it for long term because it's based on the size of the companies. Companies that are no longer big based on market capitalization, they will be replaced by the companies that have a larger market capitalization. That is why if you look at the general market, it always goes up. But if you look at the individual stocks, individual stocks don't always go up, no matter how good the company is. Look at Apple. Now Apple is trading at about 170 rand, I mean 170 US dollars or 168 US dollars. Every time the share price of Apple goes up by a certain level, they split the shares to reduce the price. Compared it to Amazon, at some point Amazon was trading about 4,000 US dollars, right? One can think, okay, Amazon is there, people are buying. Look at Blockbuster. Plenty of people, they thought that Blockbuster was going to exist forever. People were going to rent movies and everything. Blockbuster didn't die because Netflix came to the picture. It died because it happens. Some businesses keep on getting recycled. Most people, they still consume sugar, but look at Tonga Tulet, it's not performing well, right? So how much time do you think you have to wait for Tonga to go back to over 50 rand per share? So that's the thing. That is why I personally don't use the term long term. I just want to buy a stock for as long as it's making me money. I'm happy to hold it, whether it's Bitcoin or shares or indices or even Forex. Once they stop making me money, I exit because I don't put a time frame. I, in fact, I always want to make money. Well, I don't think I can make money every day, but if I can make money every month, then I'm happy. So if we look at long term and the stock market is in the buy market for 12 months, that means that in the 12 months I'm not making money. I don't want not to make money in 12 months. I want to always to be making money. As long as the market allows me to make money, I just want to make money. I don't want to sit in a company that the share price is declining just because I'm saying I'm holding long term. Look at UPST, Upstart. It went up nicely, then it reached the top, then it started falling. Not even 24 months. Some people, they made money. The people that exited it was going up, they made money. The people that bought while the share price was falling, I don't even know what UPST does or Peloton does, but as the share price is falling, I'm not buying that. Whether I want to hold it for a day or forever, I'm not holding it, right? Let's see. What's the other question? All right. Okay. Yeah. No, Mojaki. The mentorship is lifetime. No, mentorship is not lifetime. It's the support that is lifetime. What do I mean by support? But before I answer you, let me finish with the piece. Yes, you need to check the entry using technical analysis. And also, yes, it's important that we don't buy anytime because when people they're saying that they are buying the dip, some people they just want to buy the dip anyway. We don't buy the dip anyway, we buy the dip at an area of value. The area of value could be the support level, it could be pull back to a moving average. Some people they use Fibonacci retracement. Some people they trade a lot with. So you need to have a place where you're going to make an entry or you're going to exit. And yes, the best strategy indeed is to take profit. But one thing that you need to keep in mind is that some people they focus more on the win rate. So when they take profit, they just want to take profit so that they can record the trade as a winner, right? But if you're taking 5% profit and you are taking minus 10% losses, then you are not making money, you are working backwards. High win rate is good if you can get it, but what is important is that the size of your wins are multiple times bigger than the size of your losses. For example, if you have an approach that gives you a 1:3 risk to reward, then you can sort of make money in the long run because you probably need to be right 3 out of 10 trades for you to make money, right? Let me now answer. I'll come back to you, Puti. I want to continue with Tate Mojak, right? So it's not the mentorship that is lifetime, it's email support. What do I mean by email support? So you see, when you buy the ebook or you buy the mentorship on Gumroad, you use your email address, then you can pay with your bank card or PayPal account, whichever that you pay with. Then Gumroad is going to classify you as a customer. Then there are people that can just go to Gumroad and follow Trend Trader on Gumroad. Then every week I publish one newsletter. That newsletter is sent to customers and followers. But during the week, if I see trade ideas, I send the trade ideas to the customers so I can select who I send the communication to. Or even if I want to send the communication to the followers only, then I can send it to them, right? If you bought something on Gumroad, you will also have access to my email address. If you have questions about the stock market, about the ebook, or about the mentorship, you can send me an email. I will answer you because you are my customer. But if you are my follower, I won't respond to your email because it's just, not to say it's a one-way communication. It's better if I keep it as a one-way communication because there are people like you, Tate Mojak. Every time you speak of something, we've got mentorship, they inbox you. How much is the mentorship? Or you say there's going to be this. How much? They never buy. They just keep on asking. You see. So if we make it to be a one-way street, we reduce the chance of us wasting our time with the people that are not interested in becoming our customers. They're just interested in getting as much information for free from us rather than also becoming our customers. So by lifetime support, we mean that our customers, anytime they have a problem, they can send us an email. We'll respond to their email as soon as we can, right? So what's this? Okay, yeah, you need to take profit. So am I able to disclose the companies I've invested in the USA? That one is very simple. I don't have at any of the videos, especially the recent videos. You look at the description below the portfolio. So if you click where we speak about our eToro profile, you can actually, it will take you to the eToro website. You will see trend trader name there. You will also see my face smiling there. And then you can see the portfolio, my current eToro portfolio, what I have in that portfolio, the percentages of profit or loss in a certain position, and also the percentage of my capital that is allocated in that position. For example, I think now I have about 16 or 18% that is invested in Apple. Then you will see that I have an Apple position and 16 or 18% of my capital is invested in Apple. And the percentage of return, whether it's a loss or it's profit. So if it's green, it means that the position is on profit. If it's red, it means that position is on a loss. I know that when it's just green, it means that I'm making money. I'm not sure if it's red, if it does show that maybe it's minus 5%, for example. But if it's red and there's no minus, just assume that it's a losing position. So if you have an eToro account, I'm not sure if South Africans can now open an eToro account. I opened my account, I think, in March 2021. And at that time, because all the brokers, they keep on updating, changing their businesses. When I joined as a South African, it's region dependent. So as a South African, I needed to deposit a minimum of 200 US dollars into my account. Then it changed. And then there was a period where now they were no longer accepting new clients from South Africa. The ones that had accounts like I did were still able to use eToro. Then there was that period where they were not accepting new South African clients. I'm not sure now because I haven't tried to open an account. I already have an account. So I don't know if you don't have an account with them, you can still follow me because if you have an account, you can just simply click follow. I post stuff there, stock analysis on my eToro profile. I post chart and do analysis there. Then if you are one of the people that follow me, you can see the post there. Also, there is even an option to copy what I'm trading. It's free. It's free for you. You just click copy trade. So every time when I'm selling something on my portfolio and I'm using the capital to buy something else, it will do the same thing on your portfolio. So basically, if you think that I can make money for you can just copy my trade. You don't even have to do a lot of work. But for you to be able to copy another trader, whether it's me or it's another trader, your account it needs to have a minimum of 200 US dollars. But like I said, the brokers they keep on changing all these rules. So yeah, the companies that I have now, actually now I'm looking at my eToro portfolio so that I can tell you exactly what I have in there, right? Let's see. So I just want to show you so that you see that I'm not bullshitting you. You see, I'm looking at my eToro screen there. So I'm reading from there so that you don't think that I'm bullshitting you. So I have Apple there. Then I have ETF. It's the Energy ETF by SPDR. And then I have Microsoft. I bought Microsoft on Friday evening when I saw that they're going to close screen. Then there's SLB, Schlumberger. There's provide tools that are used in the oil and gas sector. I have Occidental Petroleum Company. I have Sealed Air. That was an interesting company. I mean, who comes up with a name called Sealed Air? And actually, that's what they are selling. They are selling sealed air. I don't know who uses sealed air, but the company is there. It's on profit. Then the other one is Halliburton Company. They also in the oil and gas sector. Then I have Altria. Altria is a cigarette company. It pays nice dividend. It's like the American version of British American Tobacco. Remember, British American Tobacco is a global company. It's not a South African company. It's just that it's listed in many, or it's available in a lot of countries. So sometimes we end up thinking that British American Tobacco is ours. Then I have a Centerpoint Energy. Then there's Norton LifeLock. Well, I'm sure most of you use computers, you use antivirus. So the company Norton that provides that antivirus, I have a position there, but it's currently sitting at a -1% loss. Yeah, so if it's a losing position, you will see there's a negative side there before the trend. Then there's another company called, well, I'll just say Kruger. I don't know how they pronounce it in America, but Kruger is more like a department store. So yeah, you can literally see all my US portfolio, the percentages, how the stocks is performing. You can see it for free on eToro. On USD account, I don't have a lot of money, so I have two ETFs, Vanguard Energy. I'm not sure if I have a Vanguard consumer staples, but I have two ETFs. There's just ETFs depending on how the market performs. I had a Vanguard Growth, S&P 500 Growth. The share code is VOOG, but I sold it as S&P 500 closed below a key level. The reason for closing that position is because I wanted to reduce my drawdown. I don't know how low S&P 500 would have went. Last week it closed above that key level, so maybe this week I will buy that ETF again. Right, let's see what other questions there from Macel. The problem is that you don't know when to sell. Can you help with the sign so that you can sell? All right, so Macel, before you trade, before you buy anything, you need to have a plan. What are you going to buy? How much of that you are going to buy? It could be the number of shares, or it could be the amount that you're going to invest in that particular company. And then you need to say, all right, once I've bought this company, when am I going to exit? There are two exits. You can exit because the market is moving against you. You can exit because you've reached a take profit level. Sometimes you exit before even reaching a take profit level. If the share price move up, at some point it gets exhausted. So let's say you buy Apple, it move up nicely, but now for some reason it's not falling, but it's also not going up. On the other hand, you look at Microsoft, it keeps on going up. So now, as a trader, I don't want my capital to be stuck in a company that is not moving. Then I can sell Apple with that profit, whatever profit I've made, take that capital and invest it in Microsoft, right? So a strategy or a plan or an approach, it has some rules. What does the share price has to do before you buy? Once you bought, how much you're going to buy? Then it needs to have a risk management, because sometimes people, they think that you just buy companies and the companies, they go up. And the market does not always go up. So you need to have a plan in case the market you buy, the market reverses. That is why we use a stop loss, right? So I don't put time, like as I was answering Zipi, so I don't say I have a long-term position. If my average stop loss is -10%, I want to make at least 3 times the risk that I'm taking. Meaning that once I reach a 30% on my position, then I can consider selling that position. I'm not saying that once I reach 30%, I'm just going to close the position. Remember, if the market move in my favor, I want to get as much money as I can from that position. So if there's a chance for the share price to go to 30%, 50%, 100%, 200%, or even more, I want to get that return, right? But as soon as the market, that particular share price, it start to show signs of weakness. Like I use technical analysis, meaning that I look at the chart. If you don't use the chart, maybe you can look at the result of the company. Okay, the internet just went out a bit. So I was saying that I want my profit to be 3 times my normal risk. If I'm risking minus 10%, the minimum that I want to make in other companies is 30%. But I want the stock market to go up as much as it can if it does go up. So I will allow the share price to continue to go up. And I said that with technical analysis, it's easy to see the price action. I can see if there is still an upward momentum or the momentum is drying down. If the momentum is starting to exit that position, right? Attention. No people, I mean, the news won't help you that much. What you're interested in is the company announcement. Yes, I can have video discussing Apple result, but what you need to read is the financial statement from Apple so that you can get information. Yes, when you hear another analyst discussing the result, it's like watching the president telling us that he's taking the country to level 5 lockdown. Then after that, you've got a journalist saying that they're unpacking what the president was saying. What is there to unpack? Because the president has already told you that he's taking the country to level 5. Same thing. If Apple report 10 billion profit, there's nothing to unpack. You see that it's 10 billion. Look at the previous reporting period. What was Apple's profit? If the profit was 8 billion, it means that Apple has increased its profit by 2 billion. That's a good sign. But if the previous profit was 12 billion and now they're reporting 10 billion, it means that what's this thing? It means that the profit are slowing down. So now that could be a sign for you to sell. But there are so many things. Remember, we know that now there is a chip shortage. Apple is an electronics company. They need chips in their devices. If they are not getting chips, they are probably not manufacturing enough phones to service the needs of their customers. So you also need to understand why there is a slowdown in profit. Do they still produce the same number of devices but people are not buying them, or they're not producing the same number of devices, meaning that they don't have a product to sell? So you really need to think about the cause of that low profitability, for example. Or did they stop selling a product? Or is there a new market player? Is there a company that sells better devices than Apple product that people are now interested in? So there are so many things to consider before you decide to buy. Yes, I mean, before you decide to sell your position. But then again, before you even buy, you will need to know these things that, okay, if this happens, this is how I'm going to react. So yeah, I understand that the response is a bit complex, but the more you invest, I'm not saying that you're a beginner investor. I don't know your level of investing and your skill of investing, but you do need to have a plan. The plan should tell you when to buy, what to buy, how much to buy, and then you need to have a contingency plan. If the stock market does not move the way you want it to move, how do you react? Or if the market, now you're in a position but that position is not working as you would like it to work, when do you sell? The worst thing that you can do to your position is to buy something, make money, then allow that money to go back to break even, then become a loss. Then you're just wasting time. You shouldn't do that. Whenever, once you've made profit, never let that profit turn into a loss. The, I mean, it's not a good idea, but at least break even. Don't make money rather than to make money and lose it and then you exit with a loss. Okay, let's see. Putty says she doesn't have that account. I'm not sure which account you don't have. Is it the USD account or the eToro account? If you're using Easy Equities, you just activate there. You see different kinds of accounts. Normally, it's the South African Rand account, tax-free savings account. Then on the side, it should be USD or Australian dollar. Well, if it shows, you can activate it. If it doesn't show, I'm not sure how you can activate a different account. I mean, I only have three account: the South African account, tax free, and the USD. I I will find out when I want to activate the Australian dollar where to activate it. But if there's someone that knows how to find an account if it's not showing there to activate it, please write there in the comment section so that you can assist the other people, right? I don't use Fibonacci. I use an approach. It's trend following. So I only started trading chart patterns recently because then I wanted to introduce swing trading to my trading approach. But I don't use Fibonacci retracement. I also don't use Elliott wave because Elliott wave it seems like they are dependent on the Fibonacci because the pullback moves. Uh, they tend to track that Fibonacci. But personally, I don't use Fibonacci, I don't use Bollinger Band, I don't use other things. What I use is moving averages. I don't even use the stochastic RSI when stuff is overbought and oversold. I know that I follow trends. If the stuff is on an uptrend with the stochastic RSI, that thing can stay overbought. So some people they think that once it reaches overbought, the share price is supposed to pull back. It doesn't work like that. I've seen companies just sitting there above 70, even 80 or 90. The share price is just keeps going up. Or if the share price is falling, it's sitting there at overbought level 30 or below 30. So yeah, I don't use those kinds of market indicators. I forgot the other name, what they are called, but I use moving averages a lot. Okay, the difference between the two Satrix 40. All right, I said that I will answer you now, Sibalkul. Right, the difference between okay the eToro account. Yeah, so yeah, yeah, you can try to look for it. It's not I, it's E. I will write there. Let's see. Yeah, so there's the name there. It's coming. It's eToro. Okay, the difference between the two Satrix 40, it's not actually Satrix 40 unless I'm answering a different question. The ETFs that I spoke about is the Satrix Top 40 ETF and the Satrix Capped All Share Index, right? Remember, we trade the JSE. The JSE has over 300 companies. So the All Share Index, it's all the companies that you can trade in the JSE. But the top 40 is just the top 40 companies in the JSE by market capitalization. So out of 300 people, they only select 40 people. So that's the difference between the top 40 ETF and the all share capped index, right? So now the top 40, it doesn't matter how big the company is going to be there based on its size. I said that out of the 40 companies, if NASPAS is 20% of that whole top 40 composition, then they will invest 20% of your money in NASPAS. If Impala Platinum is 1%, they will put 1%, right? But in the Satrix capped, they will still give the big companies a bigger proportion, but no individual company is going to exceed 10%, right? So even if NASPAS is 23%, on the Satrix capped all share index ETF, NASPAS is just going to be 10%, you see. Then the other companies as well, because they want to put everything in those, then they are going to get different proportion. Then the other difference is that the Satrix Top 40, as far as I know, is the cheapest ETF that you can buy. By cheap, I'm not talking about the rent value that you pay for the ETF. I'm talking about the total expense ratio, the fee that you're going to pay the company that is giving us these ETFs. So the total expense ratio on the Satrix Top 40 is 0.1%. There is no official total expense ratio for the Satrix capped index ETF, but the proposed one is 0.25. So the 0.25 is 2.5 times larger than the Satrix Top 40. Then the other difference is that the Satrix Top 40, it makes quarterly distributions, meaning March, June, September, and December. That's when they will declare a distribution. But normally these results are late. They come a couple of weeks later because they have to consolidate everything. But in a nutshell, Satrix Top 40 is going to pay you 4 times per year compared to the capped all share index, which will pay you every 6 months, meaning that in a year you will be paid 6 times. right? So depending on which one you want, if you look at it in terms of the total expense ratio, the Satrix top 40 is cheaper, but also remember that the distributions are going to come 4 times. Distributions are not guaranteed because the investing companies, if those companies are not paying dividends, it means that ETF won't have money to pass to investors. So when we speak about distributions, let's not talk as if the distributions are always going to be there, right? But the capped is going to pay us 6 times in a year because it's every 2 months. And then I said that in my view, the benefit of the capped all share index is that we've seen that some small cap companies they've been performing well. We look at PPC, ArcelorMittal, Steinhoff, Purple Group, and many other small cap companies. Okay, maybe Renegen has done well. Tungela, I don't think Tungela is part of the top 40. So Tungela has also done very well. So if you invested in the top 40, you will have missed the performance of those companies. So in the all share index, you're also going to get exposure to those companies, right? So I hope that now I've answered your question that was put, right? Anyone that has a question, please do write your questions there. I'll be answering your questions. And then if you enjoyed this session, please give this video a thumbs up. I'll appreciate that. Right, Sivalukulu is asking if I'm investing in crypto. If so, what's my take on the bloodbath? Right, I do buy a crypto. I do trade crypto. Let's not use invest, because once you say you invest, then there's this expectations that you shouldn't panic if there's a market correction. I do trade crypto. I use VALR platform. Some people use Luno, Binance, Bittrex, different platforms. So at this moment, I do have a position on ADA, that is Cardano, and Matic, which is also known as Polygon. Yeah, those are the two that I remember that I have. I don't have a position on Bitcoin or Ethereum or any of the other coins. I definitely don't have, or there's also altcoin trader. Yeah, I don't have position on the coins that are normally called shit coins. When I want to buy a specific crypto or a token, I look at the chart. If I see if the chart gives me a buy signal, then maybe I can then read a white paper, not necessarily a white paper. If you go to Coinbase website, sometimes you can get just a brief overview what that token or crypto does and stuff, right? So Bitcoin, I know that it's alternative currency, decentralized digital currency. So if you buy that story, some people buy Bitcoin because they want that decentralized alternative currency. Ethereum, it's a smart contract network. Some people buy Ethereum because of that. I love that idea. I mean, Ethereum is cheaper than Bitcoin. At the peak, it was 4,000 US dollars. Bitcoin was over 60,000. So I mean, people expect or would like to see Ethereum to reach that level as well. Then, when I read about Polygon, so Ethereum is there, smart contract. I'm not sure if it can process 10 or 100 transactions per second, but Polygon can process either 100 or 1000 transactions per second. So Polygon is still based on Ethereum network, but it's much quicker. It does not have some of the bottleneck that Ethereum has. So that explains why I have more Polygon in my portfolio. I understand the utility of that crypto or token, and also the chart, it's still holding very well. The price hasn't closed below the 200-day exponential moving average. So that's the reason for owning more Matic. I have an idea what the technology does, what it aims to solve. Okay, in terms of inflationary or deflationary, I forgot whether it was inflationary or deflationary, but yeah, some people, we get into this investing trading game for different purposes. But yeah, man, when I was reading on this blockchain, I learned a lot of things, some things that I was not familiar with. I think my only regret is that I didn't trade crypto early enough because it was just based on the chart. At the time, I just thought, oh yes, there are less charges on Matic compared to Ethereum. I mean, especially the people that are doing NFTs, they always complain about expensive gas fees. Some people are even minting their art. Well, people mint NFTs, different kinds of NFTs, just that I'm more familiar with the art NFTs. Some people prefer to mint their NFTs on a different coin or token because the Ethereum is expensive. So yeah, that's that. I mean, we're in the market, we're all in the market to make money, but the rationale for buying whatever that we are buying, it's completely different. I could be buying Sasol because of the technicals. Somebody could be buying Sasol because of the potential that they see in the business. I don't have exposure. Well, I don't own an electronic vehicle maker, whether it's Tesla, Neo, or Xpeng. That's because I don't have a buy signal on those. But I mean, electric cars, I think they are cool, but I drive a car that has a petrol engine. I love the noise of a petrol engine, but I'm not saying that that's the reason why I'm not buying EV manufacturers. When Tesla was moving up, I had a Tesla position. I have since closed that Tesla position. Some people they will buy maybe Neo because they believe that if Tesla was able to reach 1,000 US dollars per share, maybe Neo will also have the opportunity to grow similar to Tesla. You see, like I said, different thinking, different reason for buying companies. So that's that, man. Yeah, so more questions, keep them coming. Don't forget, I said that I will set up a Zoom meeting, put the details under the community tab. Next week, instead of having the live session, we'll actually have a Zoom webinar. So in that Zoom webinar, I'll be able to share my screen. If you want to go through charts, we can go through charts there. If there are some things that you want to check, we'll be able to do those things. Then later on, we will take that video and upload it on YouTube, because right now I'm just reading your questions and responding to them. But if maybe we want to look at the chart, we can't look at the chart, right? So if you have some questions, do keep them coming. Now I see that you've about 1 hour 17 minutes. So let's see, what am I going to trade this week? Maybe let me share that. What am I going to trade this week? So I saw that PPC, it pulled back a bit to the 200-day moving average. So I'm looking to buy the dip there on PPC, even though the management, it's like it's selling. There's this other gentleman on Twitter, the finance ghost. He's well versed in finance. He has a qualification in finance. He did explain a bit why the management is selling. I think they want to reduce because they have a large exposure to PPC, so they want to de-risk their investment. So it's not like they are not bullish or positive on PPC. They are just, it's like when you create a trust fund, you invest in a certain company, then you realize that you have too much exposure in one company, then you start to sell your shares so that you can reduce the risk. Just in case that company tanks, you don't want it to go with your whole life savings. So it's not like they're negative on the company. So that brings a bit of confidence to a retail investor. So I'm looking to buy more PPC. And then the other one, it's Curo Holdings Private Education. The stock has reached a new 52-week high. So I'm happy we had the video in the past to say what was Curo. You can browse on our videos to see the video, the analysis that we did on Curo. So it's a continuation on that video. We are happy that the market is moving as we had anticipated. So that's the reason for buying. I will come back to your question, Bamdul. I'm not ignoring it. And then MTN found the support there. I didn't have an MTN. I missed that run. It happens. Sometimes you just miss a stock that's going to perform well. There is no need to chase it, because every day there are companies that can give you a low risk, high reward opportunities. That is how I choose my stocks. That is why I'm always using technical analysis, because I don't want to have a bias to a certain company. Let's say, for example, now I'm bullish on MTN, but if I say buy signal on Telkom, I'm still going to buy Telkom. I don't care that as businesses, Telkom is competing with MTN. That's the least of my worries. If Telkom does well in terms of share price, I want to benefit from that share price movement. So yeah, there is a dip there on MTN, and then I'm looking at Netbank. Netbank is about to break above a resistance level, so I'm looking to see if it closes above that resistance level. I'm bullish on the financials. I've touched this topic so many times in the YouTube channel. We have a video to say that I was buying a lot of Satrix FINI ETF. I don't remember the total expense ratio of Satrix FINI, but it's one of the big position in my tax-free savings account. You see, when it comes to investing, when that's one of the reasons why I don't respond to the people that say, "Oh, please create a WhatsApp group so that you can talk shares." I don't talk shares. I trade shares. You can talk about Time Bank all day long, but if I don't have a position on Time Bank, it doesn't matter what they do because I'm not benefiting, right? So yeah, I spoke about Satrix FINI. Then I bought a lot of Satrix FINI ETFs in my portfolio. It's about 25% or so of my tax-free savings account. Okay, a large position there is a Satrix Top 40 ETF. Then I'm looking at Vodacom. I will do a full video on Vodacom, what I'm seeing on Vodacom, and why now I'm going to be bullish on Vodacom. And then maybe uh, I haven't done an extensive technical analysis, so I don't want to say that I would buy where the share price is currently is. But once I've done the video, then I will know where to buy. Because sometimes when you talk about a stock, some people, me, I know how I trade. Ne? I always wait for a confirmation. If I see that maybe the share price is moving up, there are certain levels that I want to see the share price traded at a particular level. Then to me, that is a confirmation. Some people, they will hear you talking about Vodacom, then boom, they jump or they buy Vodacom. If Vodacom end up not confirming that signal, I may not buy Vodacom. Then they start losing money. Then they are worried why they are losing money. Waiting for confirmation, it's important. It's better to be late in a position than to be early and be wrong, because in the market there's one right side of the market. It's when you are making money. If you are not making money, it means that you are on the wrong side of that particular market. Yeah, so that's that. It's PPC, Curo, MTN, Netbank, and Vodacom. I'll make a video on those, but I have a watch list of some of the stocks. We've got APSA, okay, Curo, Discovery, Netbank, Sasol, there's Cash Build, and then there's Gap Industrial. I will make a video on this so that you can see. So if you haven't subscribed, please make sure that you subscribe so that you don't miss that video, and click that bell notification so that you can be notified. And good people, do watch those videos. Don't just rush in there and say, "Oh, okay, he mentioned Curo, Discovery, and Sasol. Let me go buy those companies." No, because in that analysis, I say this is where I'm buying and this is where I will exit if my stop loss is hit, or this is where I will exit if the take profit is hit. Now, people, they buy the stock, then they don't know what to do with the stock because they didn't watch the full video. They were just interested in the names. No, I'll tell you, it's not about the names. It's the thinking behind the names. Why am I buying those particular names? How am I going to handle that trade? How am I going to exit if I'm making money? And also, how am I going to exit if I'm losing money? Right? Time Bank, any idea where it's going? Well, I definitely don't have an idea where it's going, but previously I was bullish on African Rainbow Capital. When we made that video, we have a video that says how to buy Time Bank shares. So it's still bullish. It found support at around 6 Rand 50 per share. So for now, I'm bullish on Time Bank. So I expect it to go up. But what if it doesn't go up? What can I do? I see that Ivan DM'd me on there. I also have a Facebook account for Trend Trader. So Ivan has DM'd me in that account. When you go to Facebook, you can search Trend Trader. The profile picture, okay, I think it's white, but you will see, if you see the logo of the YouTube channel, it's the same picture, just that it's white there compared to black, as it is there. So we also have a Facebook page, Trend Trader. You can follow us there. Even on Twitter, the Twitter handle is Trend Trader JSE. In fact, it's much easier to post chat on Twitter, because sometimes you just see something and then you just boom take a screenshot of the chart, you post it on Twitter, maybe you give it a brief of a commentary. So yeah, we post a lot of things there because making a video, it takes some time. You have to set up everything, you have to record, you have to edit and upload. But if you just take a screenshot now and you put it there on Twitter, it's much easier. And we also respond to people's questions on Twitter. We are not there to be celebrities, to be followed. We do follow some people. Okay, now it seems like we have an issue of a network. We are back. I was saying that you can see us. Hi, Lebu. If you have a question, please just type in your question. I will be able to answer it. Yeah, so I don't know if the message came before we lost the connection, but I saw that Lebo just came. Lebo, if you have a question, just type that question. I will read it and answer it. Right? I was saying that we do have social media accounts. We are on Twitter, we are on Facebook, we are on Instagram. We don't do a lot on Instagram, but Twitter, that's where you're going to find a lot of chats. On the Facebook page, so far we don't have a lot of followers. Even the engagement is not that a lot, so we are a bit discouraged from sharing a lot of things there because it doesn't have a lot of engagement. But there are people like the Piso who always like the stuff and respond there. So yeah, we're not gonna stop posting on the page. We want that page to grow. We'll continue to engage people. If you follow us on that Facebook page, do engage us so that you can motivate us to post more stuff. The reason we post a lot on Twitter is because we always get engagement on Twitter, right? Steinhoff, do I see a potential? Right, the share price based on the chart, I like Steinhoff. Let me see. Pelati, these things change. Friday, I could be liking it. Today, it's a different day. All right, at this moment, the share price is high. So I don't have a position at the current moment, but it's currently trading above the 50-day moving average. Depending on whether you have a position or you don't. If you have a position, you can still hold that position for as long as it's trading above R4 per share. For me, since I don't have a position, I would have a buy stop order somewhere around R5 85 cents per share, because it will mean that the share price is moving up. So that is just based on the share price. In terms of the fundamentals, so you say they plan to reduce their debt. Well, I expect that if they do, because for them it's not really a matter of debt. Most companies, they do have debt. Their problem was the accounting fraud, and then okay, I see that we have network now. I was saying that have debt. What they did is that they did that magic of code claims. Once they've paid anyone that is suing them, then expect business to be normal. Remember that Steinhoff owns 80%. Okay, they used to own 80% of Pepco, even though now they've sold a bit of that profit. Steinhoff owns about above 50% of Pepco. Pepco is profitable. So Steinhoff as a company still has good businesses. There's nothing that can stop Steinhoff at the moment, especially once they are done settling all the claims. So to answer your question, I expect the share price to go up. Personally, I don't have a position on Steinhoff, but I have a large position on Pepco. And last week, Monday, I received a dividend on Pepco. We made a video to say that we're adding onto our Pepco position. So I hope that things are clear now regarding Steinhoff, the settlement, and the businesses that Pepco is involved in, the profitability of Pepco. Steinhoff is still going to continue to be profitable as a business, especially once they are done paying everyone that is suing them, right? So I'm not sure if there are some other questions. I see that now we have 7 people that are watching live. So for the 7 people that are still here, let's just give it another 15 minutes. So if you have questions, do send your questions, because the only reason that you're going to stay here is if you guys have questions. From our side, we've already covered everything that we wanted to cover today. So if you have a question, just type your question and then we will see. Forex trading. All right, we'll cover forex trading. Let's see Mr. Ntuli's question. What platform am I using to analyze or trade shares? Right. For trading shares, I use easy equities. It doesn't matter what's your belief in terms of using easy equities for trading, but I'm using easy equities to trade shares. And then the platform that I use to analyze, I use TradingView. Yeah, all the charts that I post on social media platform, even when I'm recording a video, I'm using a TradingView. But you can also use a website called investing.com. It's free. TradingView is also free, but there's an option to buy a premium or pro TradingView, which gives you more capabilities. On the free version, there are not a lot of capabilities. What else? And also, the free version has a lot of adverts. So every time you use it, you have to close the adverts, right? Lebo Martin, I will come back to you. Right, right. Lebo is asking if you have training. Yes, Lebo, we do offer training. The easiest way that you can trade you is that you can buy the ebook on Gumroad. The ebook is $25. Then you have access to our channels. Then we can talk to you directly there. But also there's an option to join a Telegram group that will cost you $10 per month. In fact, on Telegram, then that is where you'll be able to ask as many questions as you want. It only costs you $10 per month, depending on the US dollar exchange rate. That's about 150 rand at this moment. Yeah, so we do have training. Yeah, we can talk about that. So I see Martin is asking about forex trading, right? In the past, I've said that I don't trade forex because I suck. It's easy for me to trade stocks than to trade forex. But like I said, same with crypto. It took me far too long not to trade crypto, but it was just a chart. So this year, I'm setting myself a goal of learning how to trade forex once again. I will dedicate some time to learn. I mean, I already know what the whole process of trading forex, but it's to just take the strategy that I have, find the right time frame where I want to trade, because I'm still going to use the same approach that I'm using trading stocks, just that forex, because the price movement is smaller compared to the share price movement, so I can't expect the same result if I were to use the daily time frame, for example. So I need to find a small time frame where I can back test my strategy, meaning I will look at the currency pair that I want to trade and say, okay, if I were applying my rules, buying here, setting my stop here, setting my take profit there, how that would have worked out, you see. So once I have back tested my strategy, then I'm going to start trading forex again. I can't run away from it. I mean, I still look at the chart of the US dollar index. From that, the XY chart, I can see where I expect the South African rand to perform. Then I go, I look at the USD South African rand chart. Then it moves the way that I had anticipated it. I use trend following, so it means that for me to use my strategy, I need to find currency pairs that are trending. Not all of them are trending. Also the time frame, if you use a large time frame, sometimes the market is just gonna move by this much. If the exchange rate change by 5 cents, that is not a lot on a daily time frame. So it's important that I find a small time frame, so that even if it means I hold that position for an hour or few hours and be able to profit from that. Because one thing that discouraged me in the past, if I trade forex using a large time frame like a daily time frame, then now you hold that position for a week, for a $20 profit, which is not a lot. If you can make a $20 profit in a day, it's much better compared to making that $20 profit in a week. So yeah, I'm well, it will depend. I've already started reading up again on the Forex material. So I think I'll be trading when the US, I'm trying to think the correct word for this, but you know that, oh, the sessions, yeah. So I want to trade when the US and the London sessions are overlapping, right? So now I know the time, like between 2 p.m., depending on what time they're using, whether they're using the day, what daytime saving, what. But it depends. So it's between 2 and 6 or 3 and 9. So that's where I'll be looking to trade Forex when that session overlaps. I won't waste my time trading a Asian session. I mean, the market does move, but not a lot compared to during the London session or the US session, or when those two sessions are lacking. But one thing that I know and I've learned over the years is that Euro USD and British Pound USD is not a trending currency. So maybe when I trade those, I'll be trading support and resistance, for example. So it's going to be a different approach. But I know that the US dollar Japanese yen, and I think the euro Japanese yen is a trending market. So maybe in that market I can use trend following. Not sure about euro GBP. So yeah, basically I still need to go back to that market and try to look at them objectively, clear the knowledge that I have in terms of trading. Because another thing that beats us up is that we already know how to trade. We think that the approach is going to apply everywhere. Sometimes it doesn't apply everywhere. The strategy that I use, it works with shares, it works with indices, commodities. Yeah, like I said, Forex. You know, before I quit Forex, at the time I was now trading horizontal levels, which could be support or resistance. I made more money trading that way. So now, even though I quit because I mean I had lost so much money at that time, I didn't have that appetite to continue trying to trade Forex. Maybe the best way to do it will be to go back and use that horizontal support, which is like support and resistance, and try to trade Forex using that approach. But then again, depending on the time frame, what you see on a 15-minute chart is different from what you see on a 4-hour chart. And then I know some people, they like to dive between different time frames. I prefer to use one time frame so that all the action, the price action that I'm seeing, it's price action that is coming from one time frame, right? I know that we lost a bit of a connection there. So Lebo, I said that if you wish to get assistance from us, the easiest way is to buy our ebook, because then from there we see that you are serious. I mean, if I were to say I will teach people how to trade, I'll tell you 100 plus people are going to say, teach me, teach me. But of those 100 people, very few will pitch. So the reason why you have to pay, so that once you pay, you know that you're going to pitch, because it's your money there that is on the line. So we said that the ebook, it costs 25 US dollars. So that's like less than 400 rand. You don't have a lot to lose. We'll try to teach you as much as we can. On there on Gumroad, where the books are listed, you will see the performance, how we traded stocks from July 2021 to mid-January 2022. You will see the performance that we got there, the stocks that we traded, the size of our wins, the size of our losses. We even have a video on YouTube showing you how much money we made trading stocks using that approach. So you can watch that video and draw a conclusion yourself to see whether can we help you or can we not help you, because we don't want to say to come here and sell ourselves to you. Like now it's gonna start to sound like we're trying to scam you if you say, we're gonna make you money and all those things. In fact, when we teach anyone to trade, those people, they still trade on their own. We just show them how we look for companies, then we expect those people to know how to look for those companies on their own. So, and it also differs. Discipline is very much important. That is why we prefer to actually mentor people than to teach people how to trade. Because if you mentor people, if I told you that these are the rules that I use, and then next time you say you bought this particular company, whichever company, I will ask you what was the reason for buying that company, right? Then if you start to come up with reasons that are outside what I decided, I mean what I spoke to you about, then obviously I will ask you, but now why are you deviating from the rules? Because some people they already know how to trade, but they are not profitable. Then they need a mentor, not someone who's going to teach them how to trade, who's going to show them how they can improve their result. So why would a person want to go back to the same rules that never worked for them in the beginning? You see, so that is why I prefer to mentor people rather than to teach people, right? Michael is asking for short-term trading. What time is more suitable for trading? Is it morning, afternoon? All right. I don't day trade stocks. I'm not trading forex at the moment, so we are speaking in the stock market context. I'm not day trading shares, so I use the daily chart. I use the closing price on the daily. I know what I normally do. If I look at the charts in the evening, then I say that I want to buy Sasol. That means that I'm going to buy Sasol the following day. The GSE opens at 9, it closes at 5. So I don't like trading when the market opens or just before the market closes, but the closing it's a bit tricky. So in the morning, I normally buy or sell if I want to close a position. I do that around 10 a.m. because that market opening madness has died down. All the orders that were there overnight have been executed. The market price has sort of been determined. Remember, when you buy or sell, there's a buyer, there's a seller. The buyer wants to buy at a certain price, the seller wants to sell at a certain price. So if there's a big difference between the bid and the ask, the spread is massive. So you want the market to establish itself to bring the bid and the ask price closer to each other, or bid or offer. Doesn't matter, but the buying price and the selling price, you want it to be as close as possible. So around 10 a.m., my belief, it's not a fact, my belief is that at 10 a.m. the market is a bit stable. So I would buy the companies that I want to buy around 10, or sell the companies that I want to sell around 10. If maybe during the day I happen to check the chart, then I see that I need to buy a company, I will look at the market again either at 4 p.m. or half past 4 p.m. But do keep in mind that with these equities, I think around 20 to 5, or okay, 15 minutes to 5, definitely you can't buy or sell. So around half past 4, I can still buy or sell. I'm just not sure between half past 4 and 15 minutes to 5 how that 15-minute period, how long can you transact, right? Like I said, I do not day trade, so I'm not talking in the context of opening a position within one day and closing it. No, just the times where I'd prefer to be in the market, because the market at that time is not that volatile. But I said for Forex, I want to trade during the London and the US session where they overlap, because that is when the Forex market is more volatile. Remember, the pips movement is just tiny. Sometimes the market can move 50 pips, which is not a lot depending on the value of a pip. So for us to make money, we want the price to change a lot. So for Forex, I need that high volatility in order to make money. But for shares, I don't want to buy or sell in a period of high volatility, because the spread is massive. You are just losing money there on fees alone, or on the spread, right? Please repeat the name of the ebook. All right, there are two ebooks. One is called Systematic Trend Following. The other one is called The Dividend Manifesto. It's available on Gumroad. It's not something that you can pirate. The only way for you to buy it, if you go, now you are here on YouTube, if you go to any of my videos in the description, there we've got plenty of things that are listed. There is a link that will take you to Gumroad. Then when you go to Gumroad, then you will see the details about the book. Then once you have paid for the book, either using a bank, debit, check or credit card, or even PayPal if you have a PayPal account, Once you have paid, then Gumroad is going to send you an email to the email that okay, let me share the link now. So once you have made the purchase, then Gumroad is going to send you an email. Then they will tell you that you can now download that book. Then once you've downloaded it in your wherever you download it, then you can read it. So let me just look for this product. I will share the link in here so that you can see it. Uh, yeah, but that ebook can help you, right? So you will see the link for the systematic trend following. It's there below your comment. Let me look for the link of the other ebook so that you can see it, the dividend manifesto. So it depends whichever book you buy. So the first link is the systematic trend following, and then the second link is the dividend manifesto. So yeah, there are people that have bought the book. You see, if you look at the other product that we have there, the Trend Trader Telegram membership, it shows that it has 0 members. That is because we started this year to put this membership on Gumroad so that people can easily join it there, and then we can collect the membership fees easily. But we already have a group. That group has over 20 members. One person was commenting here, Martin. Martin asked about Forex. He is a member of that Telegram group. We have over 20 members. We do discuss charts almost every day. There's something that we discuss there. And that's the thing. I mean, if you tell people that, oh, there's a small fee that you have to pay, then people start to think, no, we're not going to get this. But look, guys, the fee is there to just we want to see what people, if people really want what they say they want. It's like a small barrier that you have to cross. Once you've crossed that barrier, then you start to see that things are better on the other side. But for as long as you are behind that paywall, you will never know what is happening on the other side. And because I mean, people are getting scammed every day, people are being sold dreams. We try not to overmarket our product because we don't want our product to sound like, oh, okay, it's just another teaching or membership and whatnot that is not beneficial and all those kinds of things. Me now, my goal as a trader is to trade the stock market and make money from the stock market. As you saw, we made that video how much money we made trading the stock market. We made that video to show people that an ordinary person, they can learn how to trade and they can make money from the stock market if they come up with their own set of rules and they stick to those set of rules. Sometimes people will ask us, if I have 500, how much money can I make from the market? We understand the situation in the country. People don't have a lot of money. 500 is not a lot of money that you can put in the stock market because the dividends that you receive from your investment is proportional to your contribution. If, let's say, for example, you are buying Satrix top 40 shares, I think they cost about 60 something rand. So I just want to do a quick calculation. So you have 500. The price of the Satrix top 40, it's not 60 rand, but I'm using 60 rand as an example. It means that you're going to get 8.3 ETFs. So if Satrix top 40 declares a dividend of 20 cents per ETF, it means that, and that is before tax, but I'm just going to use it as if they're going to pay the whole 20 cents. It means that you're going to get 1 rand 67 cent. You see, that's the reality. Then people, they get disappointed because they went to invest in the stock market with unrealistic expectations. So when you do membership or mentorship, that's when you ask a person, what are the expectations from the market? You cannot have high expectations when you don't have the skill, because how are you going to make money in the stock market if you don't know how to trade, as an example? Or on your capital, if you don't have a large amount of capital that is invested there, you've got a few hundred or few thousands, the returns that you're going to get there are going to be equivalent to your investment. Any financial literacy book that talks about stock investing, they normally say that over a long period, the market returns on average between 8 and 12%, right? So let's just take the upper band, 12%. So in a year, you can expect to return 12% from your share investment. What does this mean? It simply means that if you put in 10,000 rand there, you're going to get 500. That's how much your money is going to grow. So if somebody does not understand that, then they become disappointed if they don't get large returns from the market, right? So it's important that before you invest, you understand what is investing, how can you make money in the stock market, and the skill that you have as an investor, and then so that you can manage your expectations, right? So now we've been here for about 2 hours. I think it's better if we wrap things up here. Let's not wait to push it for 2 hours. I see that there are no questions coming. So thank you everyone that has pitched in today. We always appreciate your engagement. We hope that we're able to answer the questions that you have. Don't forget that next week it's going to be a Zoom session. We leave the Zoom details on that. If you go to our channel, you will see there are different tabs. There's a community tab. Then if you go to the community tab, already so you're going to find the Zoom details. That will be the Zoom ID and the password that you will use to connect for that Zoom. It's going to be somewhere between 1 hour and 2 hours, but it won't exceed 2 hours because of the limitations of Zoom. So that is going to happen next week, Sunday at 2 p.m. So instead of having this live session, we'll be having a Zoom webinar. Then we'll upload that webinar on the YouTube channel. So thanks again to everyone that has pitched in. For those that haven't subscribed, please consider subscribing. If you enjoyed this session, please give this video a thumbs up. We'll appreciate it. Remember, the session is recorded. It's always going to be there on YouTube. So even if you missed something, you can still go back and watch the session from the beginning. So let's wrap it up here for today. Thank you. Thanks to everyone that has pitched in. We will see you on the other videos that we'll be making. If you have any questions, comment, or suggestion, you can always write your questions there. We always respond to all the comments that we find there. You are welcome, Lebu. We hope to see you after you bought the ebook. We hope we're gonna be welcoming you as one of our customer, and then you will see that we send a lot of things there to our clients, but we also send some stuff to our followers. Thank you, Mr. Ntuli, for staying with us and your questions. I hope that I've answered your questions, and also that, I mean, obviously, your questions, they stimulated the engagement in this video. So we really appreciate that. We'll see you. We're still gonna be making more videos on the stocks. Like I said, I have a watch list of stocks, so I'll be making a video to go through all those companies where we are looking to buy the stop loss and take profit and what to expect from these companies. So let's wrap it up here. Thank you.